Thanks very much for staying with us. Some business news now, and international credit ratings agency Standard & Poor's has downgraded Kenya's long-term foreign and local currency sovereign credit ratings to a B from B+. S&P says it could lower the ratings further if Kenya's path to economic recovery and efforts to curb its fiscal deficits prove inadequate. The ratings agency estimates that Kenya's economy grew by just 0.2% in 2020 owing to the pandemic. It cites a, quote, history of ethnic tensions, unquote, as one of the key constraints for Kenya's ratings. Others are the country's low GDP per capita, high fiscal deficits and debt stocks. S&P projects that the economy will grow by 4.4% this year. The Policyholders Compensation Fund will make compensation covering 84% of the total claims made by policyholders of Concord Insurance, as the fund makes the first payments in compensation since its inception in 2004. Claimants will now receive a maximum of 250,000 shillings for their funds locked in the insurance company, which was placed under statutory management on the 6th of February 2013. Policyholders of Concord Insurance are claiming compensation to the tune of 467 million shillings, with the Policyholders Compensation Fund set to pay compensation to the tune of 392 million shillings. Insurance companies and policyholders each contribute into the fund a levy of 0.25% on gross direct premiums written, which is used towards a partial settlement for claimants in the event that the insurance company becomes insolvent. Women are more conservative than men when it comes to seeking capital to inject into their businesses, a factor which constrains the growth of their enterprises. Well, that is one of the salient points that emerged during a forum for women in leadership organized by Citi, which explored their challenges and successes at the workplace. Alex Mwangi reports.
It is a well-known fact that women are better at repaying debts than men. This could also be partly informed by the safe nature of their borrowing.
We often say that women are more risk averse. I'm not completely sure of that. I think women are more risk aware. They're more conservative when accessing capital, and they base, the amount they ask for on what can be paid back with relative ease.
Under the Pan-African Youth Entrepreneur Development Program, or PAED, which is run by TechnoServe in partnership with Citi, 7,500 micro-retailers have benefited since its inception, majority of them women. The program, currently in Kenya, Tanzania, Nigeria and Cote d'Ivoire, has shed light on the business skills of women.
We notice women businesses are relatively smaller, and the size of their stock is also less when we compare it to their male counterparts. A survey that we conducted also showed that women operate their businesses up to 4 hours less per day. And this could probably be attributed to other family-related responsibilities that they have besides running their business.
The Kenya Association of Manufacturers carried out a study last year to determine the policy gaps for women in manufacturing.
We also found that male-owned companies had slightly more women in senior management at 89%, whereas female-owned companies stood at 85%. We found that for the local female-owned companies, the female-led companies had more women in senior management, about 88% of them.
Younger women are worse at debt repayment than older women, and also borrow more than their older counterparts.
What has become apparent is, other than hard skills, which is understanding finance and access to markets, there's a lot of space for soft skills like confidence building, being able to tell your stories in a succinct manner in a way that people can understand, and more importantly, the people on the other side understanding the challenges that we face.
The Nairobi Securities Exchange earlier this year joined the 30% club, committing to push for women to occupy at least a third of the senior positions in listed companies. Alex Mwangi, NTV.
Now, a section of digital lenders have welcomed the proposal to have them regulated by the Central Bank of Kenya amid concerns of excessively high interest rates, illegal mining of customer data and shaming of loan defaulters in the sector. The lenders say regulation will help strengthen and ensure sustainable growth in the sector, besides addressing issues raised by consumers in the sector, which has recorded massive growth in recent years. If the bill currently before Parliament becomes law, digital lenders will have to be licensed by the central bank and seek the regulator's approval before increasing lending rates or launching new products.
As Ivan rightfully said, is a sign of maturity of a market, right? So it means that we now have understood what are the limits for our products, we've also understood some of the bad actors, what they can do. And if we standardize the market, we can now have a more robust, we can access cheaper capital, etc., and so it'll be easier to onboard customers.
We just want to make sure that regulation does not